think, act, and prosper. You are now tuned into the Money Level Show.
Hey, Vlad, glad to have you on the show today. Appreciate you reaching out to me and looking forward to having a discussion.
Hey, Daryl, very happy to be here.
Yes, so you reached out to me about a book that you recently had written, and it just recently released, which we'll talk more about that. And in this book, you break down how to invest, how to understand money, finances, all these things that me and the audience cares about. So could you just give us a little bit about your backstory and how you came to investing and what led to you writing a book?
Yeah, sure. So I was originally born in Ukraine, and then I moved to Ireland when I was a kid. So my background is in molecular biology. That's what I've done in college. But I very quickly realized that that's not something that I want to do for the rest of my life. So even when I was in college, I already started basically getting into investing, reading as many books as I could. And then when I started learning about the history of money, that's where I kind of got into the commodity sector, because I sort of realized that in an era of fiat money, you have to buy tangible things that are real in nature and things they cannot print. And that's pretty much how I got into it. And then um, with relation to the book, I sort of had a lot of questions from my family and my friends about, how to start investing, what stock should I buy, all those kind of things. And I just decided that was a while ago, I was kind of procrastinating for a bit, but then I realized, okay, I want to do this. So I wrote the book called Introduction to Investment, basically, which explains all the fundamentals, it explains the history of money and all the fundamentals that would kind of give you good broad knowledge of the markets, different investing vehicles you can use depending on your level of expertise.
So what drove like the your family reaching out to you about investing? So for me, like in my personal story, I was consuming so much knowledge that I would have like 2-3 hour conversations with friends. I would just bring it up, and I was just super eager and passionate, and I would just bring it up, talking with my friends about it. And I just saw how unsustainable it was to have these 2 hour conversations with something that I was just very passionate about. And then I was like, hey, I need to start a podcast. And so that was how the Money Level Show ended up coming to be. And so what was this like for you and your family, friends? Like, how did they know you were into this? So like, how did they become aware of this knowledge that you had?
Well, I think that you're lucky that your friends wanted to listen to you, because in my case, at the start, they didn't really care about investing at all, most of them. Then, well, once I started doing it, I've, once I started getting some of the results, they kind of got interested. Okay, you bought this stock, should I buy it now? And so that's kind of how it started. Now, my family was always supportive, but they didn't want to, hear much about it, the details. Okay, you're doing that thing. I hope it goes well for you, and that was kind of it, you know. So, but some of the family members did get interested, and they were kind of asking, okay, how could I start? What should I buy? And similarly with my friend. So then I kind of realized, well, I can't really tell them what to buy, because I can't. There's always risks associated, and you have to know why you're buying it based on your own circumstances. And so that's, then I kind of got an idea, well, if I write a book about explaining all the fundamentals I wish I would know when I was starting out, that would kind of make life easier for them. And then I'd get better questions from them then if they would like to know like what I invest in, what stocks do I personally like to buy in, and that kind of stuff. So that's how the idea for the book came around. And yeah, and I finished it a couple of months ago, and it got released a week ago.
Okay. Okay. That's good. That's good. So, so obviously, some family, I'm sure, probably are like, "Hey, I don't want to risk the money. I don't want to, investing is risky," or they may have experienced other people losing a lot of money and stuff, and so like, it's kind of like sometimes you're battling like this fear. Like people think that like say like for here in the U.S., like when you're in the dollar, people think that the dollar is just ultimately safe, and it's like no, it's not. Like banks have risks too. There's a lot of government debt, so like there's all these cases for like, okay, this is why it's okay to have dollars, but you also want to be diversified into other assets, whether that be stocks or gold or whatnot. And so was that kind of like the nature? Was it like just genuine uninterest from some folks, or fear? Like what was kind of like the, if you could sum it up? I mean, obviously not everyone's the same, but if you could, like, this is the general, sentiment that you received from friends and family.
Yeah. So I felt like fear was definitely a common theme, not knowing like the way most people I think I work hard enough for my money, I can't risk to lose anyway. And so that would be the common theme. Now, what I've done is I'm very passionate about the history of money. So I would kind of try to explain that to them, saying that, okay, when we used to live back many, many years ago, when a farmer would produce a commodity of interest, he would swap with another farmer. So they have both. Then we got to the stage where we would use precious metals like gold and silver, which would represent your production or your produced commodity. And then the Chinese came up with an idea of what they call flying money, which would represent the precious metal, which would represent the commodity. So they kind of all work together. So that's all good. But then after President Nixon removed the dollar from the gold standard, and it all started even before then the dollar basically became something that can be printed uncontrollably because there's nothing that could fundamentally prevent it from being printed, right? Because before it used to be, if you wanted to print a dollar, there had to be a certain amount of gold that had to be stored in order for that currency to be printed. But now, in the world we're living now, currency can just be printed completely uncontrollably. And then we have many examples of what that can lead to if it goes too far, with the Weimar Germany, with the Zimbabwe. So I suppose I would use these sort of stories to scare them, and then they would get scared enough to get interested in invest.
Yeah, yeah, for sure. And I know you're not like scaring them to like make a decision or so that you could benefit from it, but it's just like probably out of just general care for your loved ones and people that you care about, just so that they can be protected and hedged. And so I start with the history of money. So that's the first chapter of your book. A lot of times people want to jump straight into making the money, but they don't want to like understand the history behind it. Like, oh yeah, forget the history. Just give me the stock to buy, uh, and such. And obviously in this book, you're wanting to educate, your audience. And so, why start with the history of money?
Yeah, sure. And so, Daryl, so I'm Ukrainian, and Ukraine used to be part of USSR. So when I was visiting my grandparents when I was a kid, I remember they had a lot of stash of like paper rubles, which existed in USSR. And I didn't really think about it that much, but it's later then I realized that that was a lot of their savings that they kept while USSR was intact. And then when it all fell apart, those paper became worthless in almost a night. So I really have like first person examples from my family that who lost a lot of their wealth because they stored their wealth in paper. And so again, that made me really interested in the whole history, how everything happened, and that's why I decided to start my book with it, just to give a broad. Yeah, 1990, 1999 to 1991, another. And so that's, I simply believe that it's really important to understand fundamentals, because we can talk about, okay, will we have the recession? Will we not have the recession? What stocks to buy? But I think it's fundamentally important to remember, why do we need to invest the currency that we have? Because if currency, if our currency would be backed up by something tangible, and if the interest rates would be high, then you can just invest the currency, collect the dividend, the interest rates, and be perfectly happy. But because every single time we get a crisis, the currency just gets printed more and more, and we can see the deficits are getting bigger and bigger, it's quite scary to save so many, because the way I see it, your savings is basically years of your life that you work very hard to accumulate those resources. And it's there are too many examples where things went wrong and people lost so much of that wealth. So I feel it's absolutely perfectly fine to have cash, have it certain amount on the sidelines from the investment perspective if you get good investment opportunities, or if just from general perspective, if you want to buy something, you do want to have some money. But it's also important to remember that uh, it's a vehicle to build wealth, but it's not a vehicle to store wealth. To store wealth, in my opinion, the cash should be converted into real things that cannot be printed.
Hmm. Gotcha. Yeah, that makes total sense. So whenever you, so like, what is your definition of money? I mean, you've studied, the history and such, and I mean, I've studied, some of the history. I remember reading The Power of Gold. Um, that's a really good book, but it talks about, why gold became money in terms of, the divisibility, scarcity, and such. And I was trying to recall, like, what is money, and so I've heard multiple different definitions, like the energy expended to, extract something out of the ground, or something that has value, and how do you determine value and such. And so, based on like your understanding of history, how would you define money?
For me, money is your saved up resources that are basically the result of your productivity. Because the basic type of work, let's say it's farming pretty much. And if you're a farmer, you put in your time, sure, to produce in excess. Because if you only produce what you consume, you don't have excess, therefore you don't have money. So to have what we call money is basically an excess production. And then that excess production, I feel, can be represented by anything. It can be represented by gold or silver, or it can be represented by paper. But I feel like the system that we had, that we used to have a commodity represented by gold and silver, which then would be represented by paper, worked just because it was convenient, but also because the metals, they kept the cap on the printing of dollars. Right now, it's quite difficult for me to call dollars money for that reason.
Hmm. Yeah, for sure. They're definitely not scarce. So, what are you looking forward to in terms of like the investment arena now? Like, you mentioned commodities earlier. So what are you looking forward to in terms of like how you're positioning yourself? Um, Obviously, there's multiple things going on. I mean, we live in a global economy. I mean, you're over in Ireland, I'm over in the U.S., And what is like the common theme that you're seeing globally where you're like, hey, this is where I want to allocate, my capital?
So I do focus primarily on commodities, but the reason for that is one of the reasons is what we just talked about. When we're investing, we are investing cash. So I want to invest that cash in something physical that cannot be printed. So that's one of the reasons. But also because we had a huge underinvestment in the whole commodity sector. If you look at any ratio charts, they will show you if you compare commodities to almost anything, it's going to be close to all-time low for the commodity. So I think commodities overall are underinvested, undervalued. I believe that the supply is limited and it takes a while to increase the supply, especially if we're talking about like copper and all of these metals, and demand will have to rise. We can talk about what's going to happen if we do get recession or not, but from my perspective, I have a very long term view. So I invest for the next 10, 15, 20 years. And because I look at the whole cycle, and if the cycle looks positive for the direction of where I'm going, then for me, it doesn't really matter if we do get a recession or not, because if we get a recession, that means I get better buying opportunities. If we don't get it, that means my teeth will play out sooner. So my view is always on the what is going to happen in the next 10, 15, 20 years, where the world is going. With that, I primarily focus on gold and silver as in monetary metals, and there are good few reasons, a few other reasons. Then it will be copper, uranium. I invest in oil and gas as well, but that's more because I feel they're really undervalued, even at current prices, the actual companies. I have no idea what's going to happen with the actual price of oil and gas because I feel like there's too many things that can go in either direction, depending if we get recession or not, what the political class is going to do. Similarly with coal, I own some coal companies because they're just quite cheap and the dividends are very good and they're hated. So the contrarian me loves that. And then uranium is and base metals and rare earths would be the other things I'm interested in. But mainly it's for the same reason. It's for electrification of the world. It's because of the artificial intelligence, the technology, the solar panels, windmills, turbines, all that kind of stuff, sort of do tell me that in the next 15 and 20 years, we will need more of these things. And when I look at the potential supply, it's quite limited just because of the whole Lausanne curve and how long it takes to get from the discovery to the production. That sort of tells me that it will be very difficult to balance it for a good few years, probably even maybe decades.
Yeah, yeah, gotcha. So, obviously, the underinvestment in the commodity sector is what me and a lot of my audience follows, and many of us are long term viewers on that. Um, and I mean, even with oil, like I've been struggling there in terms of not necessarily like I have a bullish thesis for oil, but now there's like these debates even within the independent financial community in terms of like whether we are at like peak cheap oil and peak oil and such. And so those things, and these are like debates amongst like respected people that I respect, that are very just knowledgeable. And so I've been kind of like, okay, what's the bear case for this, and such. And then I mean, the same thing with climate change, like multiple sides of people that I respect. Uh, some people are like, hey, this stuff is a sham, like people I respect. And then I have people that are like geologists that are like, this is basic geology, and this is how it works. And so, you have people that may be trained in the academic system that has a certain view, and others who may or may not be trained in the academic system that has a contrarian view. So that's probably been like the most challenging things to decipher, and then you have to like almost like choose a camp, choose your side, and hopefully it plays out in your favor, right? So that's like a
I feel
challenging thing for an investor,
I feel the same with oil and gas. I just cannot decide which way. It's not even that. I actually literally think there's so many variables that it can go either way. And that does not necessarily mean that the other camp was wrong. It just means that something happened that they could not have even thought about, you know? And that's why I only have a small position with oil and gas. I mainly focus on dividend paying companies, and that are relatively cheap fundamentally compared to the current block prices. But if we're talking about copper, uranium, and gold and silver, I, at least I feel there's very little debate whether price is going to be higher or lower in 10, 15 years, because they're fundamentally needed. There's fundamental undersupply. There's money printing. They're going to keep printing it. So I would put more capital towards those things that I can sort of better understand or better predict the future. But with oil and gas and coal, I feel like they're too cheap for me not to own any of them. But also, I'm not certain enough what's going to happen for me to allocate more capital into those assets.
Mm-hmm. Yeah. So, I mean, it's cheap enough to speculate and kind of have like a light thesis, but you definitely don't want to bet the house on it. So I do want to have you back on so we can go through more of your book and just more ways people can invest. I mean, obviously, some of the things like valuations, which is a really challenging concept for many people, in terms of like how to understand valuations and how much time you have to spend there. And then some people don't even want to engage in that, so they just buy the ETFs, or and allow the company that's managing it to do the valuations and such. And so I do want to get there next time we have you on. And yeah, so where can people find your book? I'll link to it in the description. But where can people find your book and some of your other work?
So people can find my book on Gumroad and on Amazon. That's where most of my work be, and they can follow me on Instagram. It's my surname. Yeah.
Okay, cool. All right, I'll be sure to link that in the description below. Thank you for coming on, Vlad.
Thank you very much, Daryl.